panel discussion yesterday at the LBMA had most panelists bearish on the metal, calling for gold to dip below $1,000, except our next guest. He's the Lone Ranger in the camp, Diego Parrilla. He's the author of The Energy World is Flat. He's also a former fund manager, and he joins us today. Thank you so much for being with us.
Thank you. My pleasure.
So let's talk about your thoughts on gold. You were on the panel yesterday, and you were one of the few who was bullish on the metal.
Yeah, I think the general consensus is probably more of the same. People are looking at the U.S. as an area of bright economic outlook, where generally the views of stronger dollar, hiking rates as kind of just a matter of time. So the general consensus points to lower gold. Unfortunately, my view is bullish gold for perhaps the wrong reasons. And I think there's a clear parallelism, in my view, between Lehman crisis and what we might be heading into, what I would call more like Lehman squared. So when you see how far people need to go to generate some sort of yield, whether it's in China or in other parts of the world, is creating what I think is a huge bubble in fixed income. And now what really got me worried and started writing my next book is negative interest rates. I think this is just the idea of perpetuating the bubble further.
So you think the possibility of a QE4, a lot of people talk about that, is a reality?
I think the big problem is that monetary policy is contagious. So what we see is a world where you should be hiking, and the US should be hiking, but their expectations of hiking is putting a lot of pressure in emerging markets because of the imbalances that we've built. And then they become worried about, oh my God, this is going to impact me indirectly, and maybe I should hold off. And as the situation gets prolonged and we keep with lower and negative interest rates for longer, this is just creating a bigger and bigger problem. So I think QE would be an absolute disaster. QE1, don't get me wrong, was absolutely fantastic. It was needed. It was justified. QE2, probably on the limit, it was the right thing to do. QE3 was a mistake. QE4 would be a disaster.
Okay, so when do you think the Fed will raise interest rates? And does it matter to you?
I hope they do, and I hope they do soon, because they are, in my view, the silent hero that Nicolas Taleb would discuss, or as a concept. We need someone to bring some sense into the central bank community, because the idea that we can just keep printing and going into negative interest rate territory is something that may go back in history as a big mistake. There's a lot of debate now. So should the U.S. hike? Yes. Will they? I hope. Okay. When? I don't know.
So that said, what price range are you looking at for gold? What's your gold forecast?
I think, to be honest, in the short term, we need to continue to be defensive. There's no clear indication of what might be the catalyst for a blow-up in Lehman squared. To be honest, we've seen a little bit of noise through Glencore. We've seen a little bit of noise through already some pain in the system. I think if and when things get out of control, we will have no bullets left. Central banks, unlike in the Lehman crisis, have no room to just continue to ease aggressively. They're already very stretched. So I'm fearful that the longer we go, the bigger the problem. I would think there's a few $100 of downside from here, but there's a few $1,000s of upside from here. So I think it's very asymmetric. And the idea is to run strategies that allow you to accumulate gold on the way down.
What other sectors or metals are you focusing on?
To be honest, I think gold stands alone from a monetary perspective. I think that the ultimate bull case for gold is there because currencies are under a lot of pressure, emerging markets are under a lot of pressure, fixed income is under a lot of pressure, and I think gold will benefit from a safe haven. That is not true for copper. That is not true for the other commodities. In fact,
industrial
correct.
Metals.
So in fact, my core view is bullish gold, short oil.
Okay, and just on the topic of oil, we saw the plunge oil took this year. Where do you see oil headed?
The long-term view, the main thesis was a flattening of the energy world through the cross energies and cross regions. We've seen some part of that happen already. From a long-term perspective, there's still a lot of story to play out. The second phase, which is what could send oil to 30 or lower, it's demand-driven. And this is a very large misconception in the energy market, who thinks that OPEC's success has been driven by the oligopoly of supply, when in reality it's all about the monopoly of demand. It's gasoline, diesel, jet. So I think the long-term picture for oil and energy in general is lower. There's a wall of LNG coming in the next few years, which is a game changer. Having said that, at this point in time, I'm really worried about geopolitics. I think that the developments in Syria are worrying, and the situation in Saudi Arabia is an unstable equilibrium because of the large budget deficit that they run, and whilst they have a big cushion, it's an area that it potentially is still too important for the oil market to ignore, and we will remain reliant on the Middle East for the foreseeable future. So whilst the imbalances are there and the pressure is for lower, both in crude and gas, I am watching very carefully geopolitics.
On that note, Diego Parrilla, author of The Energy World is Flat. Thank you so much for being with us. Thank you for stopping by.
My pleasure. Thank you so much.
And thank you for watching our coverage here from the LBMA in Vienna. We'll have more for you, so stay tuned to Kitco.com. Thanks for watching.